Well, hello everyone and welcome to Momentum channel. My name is Mo, and in this video, we're going to be going over our dividend and growth stock portfolio with an anticipated monthly dividend amount of close to $860. We'll be walking you through what holdings we have in our portfolio and our plans for getting on track to reaching that financial independence and financial freedom in the next several years. Now, before we dive into the content of the video, I wanted to share with you a book that I'm recently reading. It's called What the Happiest Retirees Know: 10 Habits for a Healthy, Secure, and Joyful Life. It's a book that I've picked up from the library. I've been actually trying to pursue my passion for financial independence, financial freedom by getting relevant books from the library. Now, I know the focus for this book, it seems to be a little more on the retirement. We are still several years away from getting to that early retirement, but I thought, hey, you know what? It never hurts to learn a little bit more about that concept and notion a little bit more in details and hear a little bit about what the happiest retirees think. This is the book that I've just started reading. I'm really enjoying it so far, and we'll see how it goes. Prior to this book, I was reading another book called The Latte Factor. For those of you who have not read that book, I definitely encourage you. It really teaches you a lot about the concept of compound interest in a simple yet powerful way to a story. Definitely a highly recommended book for you to check out. Those of you who have been following our journey, are a subscriber here on Momentum Finance, you know that we've been making these videos every week now, covering our stock market portfolio, whereby we are trying to build in a larger position in terms of the dividend income. We started off with one of our first videos whereby we showed how we are earning on average $600 in dividend income per month. Following that, a week later, we managed to put a lot more funds into the market, use that for those funds to buy more shares and bump that dividend income, expected monthly dividend income, from $600 almost to $750. And this week, I'm super excited to be sharing with you how we've managed to bump that up even further. And right now, we are closer to that $860 expected monthly dividend income. Let's walk into it and see what our positions is showing and what holdings we have in our portfolio. I'll be also sharing with you some of the additional positions that I would like to add to my portfolio in the week ahead, and 2 positions that I'd like to trim off over the next few weeks. Let's take a look. Here's a high-level look into our portfolio with about $372,000 invested in the market, currently showing a value of close to $374,000. This portfolio is currently up by a total of $1,863, or about 0.5%. Now, I know this might not sound the greatest return overall, but keep that in mind that this year has not been the greatest year in the stock market, and the portfolio, the way that it is in its structure and its holdings, it's fairly new, and we started the past 1 or 2 months really getting into the gist of it and trying to build it the way that this portfolio is formatted and structured. Total estimated dividend income for us in this portfolio is currently sitting at $10,367, quite an upside and increase compared to the last week, and it averages $864 per month, or about $28 per day. Not bad, eh? I'll walk you through the specific holdings we have in our portfolio, what their returns are, what the expected dividend income from them is, as well as the target that we've set to kind of balance out these holdings in our portfolio. The largest holding in this portfolio is VDY, or Vanguard FTSE Canadian High Dividend Yield Index ETF. As the name suggests, the VDY gives you exposure to a set of about 47 to 50 high quality Canadian dividend paying stocks. It's a limited set of stocks, but they definitely are focused a lot more on dividend payments, which is why our expected dividend income, a large portion of it is actually coming from VDY as well. We currently have $167,032 in terms of the market value invested in VDY. This comes from 3,862 shares that we own between my wife and I. Currently, we have about 45% of our overall portfolio dedicated to VDY. We would like to trim it down to some extent, not necessarily by selling these shares. We don't intend to do that, but rather by putting more money into our portfolio and using those to instead buy the rest of the shares that we're going to go through. That way, we want to bring that exposure to VDY to a lower target there. The recent ETF that we plan to add to our holdings is XIC. It is also would be giving us exposure to Canadian stocks, but it's more of a total overall stock market in Canada. So we want to really kind of get a little bit more exposure to not just the high dividend paying stocks in Canada, but more of a broader stock market in Canada. And that's why we want to get about 15% exposure to XIC. We currently do not have any shares of XIC, but the plan is in the week ahead, we're going to start adding to those positions. So keep an eye out for our next video So be sure to keep an eye out for that, as next week we will be sharing with you how we've added some new shares of XIC to our portfolio. And the target is we want to bring it to that 15% for our XIC. Our second largest holding at this time is VEQT, or Vanguard All Equity ETF portfolio. It is belonging to our Smith Maneuver portfolio. Last week we've added some new funds closer to that 4,000 and pouring that money into the stock market, buying new shares of VEQT. I believe we've added close to 50 to 100 more shares of VEQT just over the past week alone. The target for us for VEQT is getting it to that 25% mark. Currently, VEQT for us is down by 8%. The third larger holdings that we have here is VFV, or Vanguard S&P 500 Index ETF. It gives us 100% exposure to 500 largest US companies. We have $79,914 in market value from 847 total shares. It currently accounts for about 21% of our portfolio. We want to maintain it at that levels and more specifically bring it to that target of 20%. Currently, our shares of VFV for my wife and I are in total up by close to 3%. Our next big holdings is VEE, or Vanguard FTSE Emerging Markets All Cap Index ETF. As the name suggests, it gives us exposure to emerging markets. We've been adding more to our shares of VEE over the last week. We've extensively bought more shares of that, and right now it accounts for about 4% of our kind of portfolio. It is down by a mere 1.1%. Our next big holdings is XEF. It's again one of those holdings that we've picked up very rapidly over the last week. It's iShares Core MSCI EAFE IMI Index ETF. It gives us more exposure to the international markets. We have 430 shares of it, which is up by 1.3%. The market value currently is at $13,175. We want to bring it down to that target of 3%, both for V and XEF. Our next big holdings is XEQT. We have $10,000, almost $10,290 invested in it. We want to maintain it at the levels that it is. It's very similar to VEQT in many ways. In fact, XEQT is the iShares Core Equity ETF portfolio. Similar to VEQT, it also gives us 100% exposure to stocks throughout the world. It gives us that international exposure, which is why we don't want to necessarily be investing both in XEQT and VEQT at the same time. We're comfortable focusing more on VEQT, but we don't want to sell our shares of XEQT either, because that would trigger some capital gains that we don't like to trigger it at this time. We would like to instead maintain it at the levels that it is. It is up by 3.1%, our funds of XEQT in terms of the market price return. Our next big holding is XDIV. We are at 1% exposure of our portfolio to it, and we want to maintain it at that level. Currently, we have 200 shares, or $4,796 in terms of the market value. It is up by 2.5%. With XDIV, we don't necessarily want to expand on these holdings as much either, because we have already shares of VDY, and they're very similar. They are very much giving you the exposure to high quality Canadian dividend paying stocks. The main difference is that with XDIV, you're getting exposure to a larger number of shares, whereas with VDY, your focus is more so on 47 or so stocks. But we are happy with our exposure to VDY and do not necessarily intend to sell or buy a lot more shares of XDIV. We want to maintain it at the levels that they are. There are two other holdings that I've highlighted in red. One is ZEB, or the BMO Equal Weight Bank Index ETF. It gives us exposure to the 6 largest Canadian banks, almost at an equal proportion. We have 39 shares, and all of these are in my wife's bank account, investing account. It is up by 7.7%. We plan to sell all of these shares in the week ahead. They are in my wife's registered account, so they are not going to be triggering any major tax implications. Once we sold those funds, we want to use those funds to buy some shares of XIC for her. Now, the reason why we are planning to sell our shares of ZEB is that all of these Canadian banks are already included as part of our investments exposure through VDY as well as XDIV. So it's kind of redundant having them separately invested through ZEB. That's why we want to kind of offload a little bit of that multiple exposure and use that fund instead and invest in XIC. And funny enough, even within XIC, these Canadian banks would be incorporated. The main difference is that the weightage for them would be a lot less, because with ZEB, almost these banks are getting that close to 10 to 15% exposure, each one of them. And whereas with, let's say, a fund such as VDY, the exposure is a lot less, or even with XIC, it's going to be a lot less exposure there. Lastly, we have some exposure to Canadian banks. This is mainly our shares of Bank of Nova Scotia. We have 15 shares there. We used to have some shares of Manulife, Royal Bank of Canada, and TDs on their own, but we sold all of those shares, and right now it's only Bank of Nova Scotia. Given that it's down by 6.6% and it's in our tax-free savings account, we don't want to sell these shares at the time, but as soon as they hit some sort of positive return, we would be offloading those shares and using those funds instead to buy some of the other holdings that we have here. This way, we will manage to get exposure 100% in this portfolio that we are showing here to passive index in the ETFs or exchange traded funds for that matter. Those are some of the key changes that we would like to make in our portfolio over the next several weeks. We are planning to invest some more funds in the stock market in the week ahead. Now, we don't plan to pour a huge sum of money into it. I know last week we poured close to $30,000 to $40,000 and managed to invest majority of it. This week we plan to perhaps put in around $2,000 to $3,000 more, and we're going to take it a bit slower and see where the stock market takes us over the next several weeks, and from there on kind of reassess whether we want to do the investments much more rapidly or take it a bit slower and wait for some more pullbacks in the stock market. For those of you who've been following the stock market closely, you know that the past 2 or 3 weeks, the stock market has done quite nicely. Perhaps it's gone up a bit more quickly, which is we are happy with, but we don't want to also rush it in case there are some more pullbacks ahead in the stock market. So we'll see how that goes. As for our stock portfolio, currently it has a dividend yield of 2.77%. Not bad at all. We're happy with it because this is not just a pure dividend portfolio, but we want to make sure it is a combination of dividend as well as growth portfolio for us. We want to gain both of those as well. Don't forget to let me know in the comment section down below which financial book are you currently reading in your free time, or perhaps any podcast or audiobook that you're listening to. Love to hear from you. Do share those in the comment section down below. There you have it, folks. A quick look into our portfolio of dividend and growth stock investing portfolio that we have here. I hope you found it beneficial and gave you the inspiration to also get started on this journey, on this wonderful journey of aiming to reach financial independence. As always, if you enjoyed this video, don't forget to smash that like button and subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, including investing in stock markets such as dividend stocks, growth stock, and penny stocks. We also talk about investing in real estate, as well as discussing ways to reach financial freedom. Thank you so much, and I hope to see you all next time.